The webinar will begin shortly. Please stand by. Good afternoon. Welcome to VIB 2024 performance announcement. Thank you for joining with us. My name is Nam, MC for today's event. 2024 marked 8 years in VIB 10-year transformation journey to become Vietnam's leading retail bank in terms of scale and quality. With the hardworking and dedicated of 12,000 employees, we have overcome many challenges and achieved a record-breaking growth, building a solid balance sheet and sustain high profitability. After 8 years of transformation, key metrics including the customer balance sheet, revenue, profit, and market capitalizations have achieved average annual growth from 20 to 30%, exceeding our transformation goals. VIB now enter to the third phase, 2025-2026, the 2 years remaining of the journey. In the context of macroeconomic showing a lot of positive signal and prospect, VIB is targeting to exceptional growth objective. So it's my pleasure to invite our senior manager to join and share strategic direction and performance insight for the next stage of VIB. The today's webinar consists 3 parts. The macro and market outlook, it will be presented by Mr. Lê Quang Trung, ANCO Chairman, Head of Treasury. The business strategy and financial performance will be by Mr. Hồ Văn Long, Standing Deputy CEO, Head of Retail Banking, cum CFO. Last but not least, one of the key pillars of the Mr. Hồ Văn Long risk management standing will be presented by Ms. Phạm Tường Vi, Head of Credit Risk Strategy. The presentation will last about 40 minutes. After the 5-minute break, we will come to the Q&A session. Will last for 45 minutes. And the webinar will end at around 5 p.m. If you have any question, please submit in the Q&A box or send email to ir@vib.com.vn. Please submit with your name and email so our team can follow up with you after the event if we don't have time to address all of your questions. Please note that the webinar is being recorded and will upload on our website after the event in both Vietnamese and English. So now we begin the first part of the webinar will be the macro and market outlook by Mr. Trung. Now I turn it over to you, Mr. Trung.
Good afternoon. It's my pleasure to welcome you all to Investor Relations meeting. Today, we gather to discuss our bank recent achievement, future plan, and also opportunity that lying ahead in 2025. As we are navigating through the evolving market landscape and our commitment to the innovation, sustainability, and excellence remain unchanged. Today, we are very excited to share with you our strategy for growth and, and milestone we have achieved, and also initiative we are undertaking to create a long-term value. First of all, I would like to walk you through the macroeconomy. So that is to see how basically the landscape for 2025. So as you see in the slide, basically Vietnam is still the most dynamic economy in the world. In 2025, we achieved like more than 7%. So compared to the rest of the world in US, roughly around 1.6, and European country basically like 1.5. So a global market, the average global economy basically averaged roughly around 3.2%, and China is at 5%. So CBI is basically still very much well under control. So this one is not really create a pressure for Vietnam to tighten the monetary policy, or in order to allow that State Bank of Vietnam with more flexibility to keep the interest rate environment low in order to push the economy grow. And on the right side, we will see the chart here. It's very interesting one. So if you see that the middle class of Vietnam is increasing. In 2025, you see in the chart that 51% of Vietnamese population is able to spend like $11 to $30 per day. So this is roughly around same as the population of South Korea, like more than 50 million people. So this one is indicating that Vietnam is the rising of the affluent and also increase the domestic consumption and investment. So this is like one of the foundation for the retail market established in this country. And back to like 2030, the middle class is also increased from the 51 to 58%, and also on the higher class, like able to spend like a $30 to $70 per day, like come up like 8% to 12%, in 2030. So this one is a very potential and very positive outlook for Vietnam. And exchange rates in 2025. So we expect that the local currency to continue to be under pressure. On the three main reasons for this one, the first of all is the Trump 2.0 and trade war and American first policy. The second one is China continue to easing monetary policy and also using the stimulus package to push the economy. So that one also make the Chinese currency basically weakening. So that is pressure on the local currency. And the third one is the US CPI still stay quite far from the Fed target of 2%. So this one is basically force Fed to keep the interest rate higher for the longer term. So these three put all together, that one could create more pressure for the local currency. And also if Fed keep interest rate high, that will make the DXY basically stronger, and then that also attract more investment inflow into US. So that one also put pressure on the emerging market like Vietnam and other market that is FII basically continue to fly out of the country and back to the US. And foreign exchange reserve is Vietnam is stay roughly around 80 to 90 billion US dollars. So this one is enough to basically to stabilize the export and then FX market. And trade surplus it continue to show very, very positive number. In 24, it's roughly around 25 billion US dollar. And I would say that this one also, have dollar dong is stabilized in 2024, and then continue in the future that the export market is showing very strong signal for the economy. And Vietnam is gaining a lot of market share, not only in US, but the rest of the world as well. So this one is a diversified, and we also, Vietnam also, build up more like a value added in terms of export item. So that one is help Vietnam is a less more stronger in export market. And FDI, so this one also they continue to showing very attractive country, the rest of the world. So FDI in 24, so Vietnam attract new registration roughly around $38 billion and slightly lower than 2023. But the quality is much high, much better than previous year. And disbursement is roughly around $25 billion, increase like a 9.4%. And in 2024, we witnessed, all the global name, big name in the market invested in Vietnam. It's like a NVIDIA, we have a Intel, and we have a Synopsys, and we have a Amcor. All the big name basically, showing their investment in Vietnam. And in the banking industry, so Vietnam will continue to create the potential for dynamic growth for the medium term and long term, short term and medium term tenor. And household debt to GDP of Vietnam is roughly around 40% compared to like a Singapore, China, is like a 62%. And if you compare to like a Thailand, our neighboring country at 89%. So it means that, room for growth for household debt in Vietnam is very strong. So this one is create a very good potential for retail banking business. So Vietnam, we have roughly around 27 million households, and more than 50% of those is called a middle class. They have like an income roughly around 15 million dong per month. So this one is also increasing the domestic consumption and then investment in Vietnam. And Vietnam also show very strong credit growth, strong credit and deposit growth in compared to the most country in Asian country, basically. And policy rate, and we don't see, the State Bank of Vietnam basically to increase the policy rate in 2025. We may see that, State Bank of Vietnam is using the OMO rate to balance between the FX and then liquidity in the banking system. And lending and deposits, I would say that, the rate is consolidated with existing range, like a lending side, roughly around 8 to 10%, and then deposits is roughly around 4 to 6% for the rest of like a 2025. And in terms of credit and deposit for industry, 2024 Vietnam credit market grow like a 15.1%, and deposit like a 9.1%. And this year, State Bank of Vietnam give a target of credit growth in 2025 is like 16%, and then expect to see that deposit it increase like a 10%. And if you look at in the chart, VIB in 2024, we did a great job, fantastic job. It showing very strong growth in credit, like almost like a 22%. So in order to do this, we did the four great things in 2024. The first thing, we have a very good, excellent in operating model, and we have a very innovative product. It's from like a mortgage, auto loan, business loan, credit card business, it's all very lean and then very innovative, And we also did a great job in marketing campaign, like Anh Trai Say Hi. That is one of the, the witness that, VIB show very commitment to the market. And the last one is that we have a performance-based reward system. So this one is like create every single step of VIB like an entrepreneur. So that one is bring up, VIB very successful. On the deposit side, it's we break the business deposit deposit business into two. One is a smart deposit, and the other one is a dynamic deposit. So this one is to meet all the certificated customer. So we help the customer is optimize all the free cash flow with higher return. And we customer to every single customer come to VIB. All automation, so this one is create a lot of convenience for the customer to deal with us. And my colleague is Mr. Long, basically who will share you more evidence and what we achieved, in 2024. Okay, let me make a summary, in my part. The first thing is the growth. So Vietnam is still showing very strong growth in 2024, which are not only in export market, we grow very strong in terms of the export market in US and the rest of the world. And Vietnam is also increase the value of the export baskets. And Vietnam also, we have like all the free trade agreement with more than Vietnam also, we have the more flexibility in the trade policy, even the Trump 2.0. So this one it have Vietnam is basically less impact. And the second one is the government put very strong target growth at 8%, and using all the flexible fiscal and monetary policy through all the like a tax reduction in tax, and also have to boost the consumption in Vietnam. And in terms of interest rates, policy rate basically will be unchanged. We don't see any change in the policy rate in 2025. And State Bank of Vietnam may use OMO rate. It is basically like a tool to balance between FX rate and liquidity. And interbank and customer deposit and lending rate, we see that consolidating in the established trends, like a 3.5 to 5.5%. And government bond, that one, we see that government bond yield probably inch up like a 50 basic point to like a 10-year. It's like a 3.5, on the more fair value, and also higher demand from the government. On the APAC business, on the APAC rate, we expect to see that the local currency may hit up like around 26,000. So in the first half, and we see that DXY basically will stay strong because the Fed may hold the rate for longer, and we market expect like a 2 cut in 2025. So that one is to make the DXY stronger, and also that put the pressure on local currency, at least in the first half of 25. And we see that the pressure basically will ease in the second half. But anyway, the dong is expect to depreciate roughly around 3%, and then stabilize roughly around 26 to 250 in this year. And we still see that the State Bank of Vietnam will continue to sell US dollar to stabilize the APAC market. In terms of the banking segment, we see that there's still strong growth in 2025 on the higher credit target from the State Bank of Vietnam is like a 16%. Last year 15, now this year is 16%. And the NIM of the banking system is basically improving as lowering credit costs and also improving the quality of assets. And the last one is the technology advancement. So this one is to have the segment basically, to improve the product and also the service, and making the banking segment basically more efficient, and the productivity on increasing productivity for the segment. So this is pretty much my coverage. So I will stop here, and then we will discuss all the Q&A from you, and hope you enjoy our meeting today. Thank you.
Thank you, Mr. Chung, for your presentation. Next, Mr. Long will bring in information about business performance and financial performance. Mr. Long, please.
Good afternoon, everyone. Thank you for being with us today. So Mr. Chung, our co-chairman and head of treasury, had just given you a picture and the context where we will enter in 2025, which is very exciting. The new government in Vietnam had committed the new era of development and targeting the double-digit economy in the next several years. And also a leaner government with a lot of like a roadblock removal, and also the banking sector committed to grow 16% in the lending this year. So that set a target for us to grow, I think, another year of strong growth in 2025. With that context, I would share with you 4 parts today. First is highlight the banks for last year. The next is a quick snapshot on the 10-year transformation journey, and then the banks and the division strategy, and finally the business performance of the bank. I would end up the presentation by the outlook of the bank for the upcoming period. So a very quick snapshot, 6 figures that demonstrated the bank performance last year. Total asset of the bank reaching almost 500 trillion. And last year, all the division have performed well in terms of growth. If you may recall, in the first half, VIB is among the lowest growth bank in the banking sector. That is where we have spent resource to re-navigate the way we grow, more focus on the healthier segment, better sales force, and also invested in technology. So from the second half, we invested for growth strongly. And we finished the year with 22% growth in lending. And that is the contribution by retail banking, SME banking, corporate banking, and institutional banking. And we still maintain the highest retail banking portfolio among all the commercial banks in the country. For equity, we reached 42 trillion, equivalent to the Basel II CAR 12%. And in the last 2 years, we have paid around 30% dividend to the shareholder. Last year, 15% in cash dividend, and this year, 12.5% of cash dividend. And our foreign ownership today is maintaining less than 5%. In terms of profit, as our chairman shared in the meeting with the government, that last year we spent the resource and also go together with economy. That's why we reduced the lending interest rate significantly. Also, because we target the better segment in the more urban area, better collateral, so that's our price have been reduced to be more competitive. That's why we see a reduction slightly in the NIM. And also, we are the bank that making one of the most bank that make the aggressive provision last year to strengthen the balance sheet of the bank. So we observed some reduction in the profit before tax. This year, we plan a floor of 22% growth in the profit before tax and target about 33% to target 12 trillion profit. A non-performing loan remains similar to last year, 2.4%. However, the quality is much better with the special mention loan, CAT 2, reduced 28% year on year. And also provision reduced more than 10%. The net reduction in the specific provision is about 12%, and the increase in the general provision because of the strong lending growth. And another part of the risk management is that we have a more than 10 trillion write-off principle that available to be collected. That is because of the result of aggressive provisioning in the past few years. And the final number is that VIB committed more than $100 million for technology investment. So today, the bank is just like a technology and app factory. The app everywhere, and we also signed a contract to build one of the biggest cloud core banking. And also last week, we kicked off the project with Salesforce on one of the largest CIM project. We finished the core card system. We finished the loan origination system with FIS of the US. And we maintain a lot of apps that created within the MyVAB and the other app marketplace, and invested a lot in data, AI and machine learning, cloud transformation, Basel, and cyber security. So that is basically at a glance of the bank last year. So 10-year transformation, we are in year 8, and the picture here just to share with you the bank committed to long-term vision. We think of the long term. And now, as we are in the final years of the first 10 year, we already planned for the next 10 year until 2036. And the bank continue with the vision and strategic positioning to be the leading retail bank by quality and scale. And what we set up 8 years ago, 20 to 30% growth a year in the lending, deposit, credit card, bancassurance, customer base, profit, and revenue. That we already exceeded for the first 8 years. And similar to the Trump 2.0, where you see more than 200 executive orders are now in the very first day. We'll be also committed to a lot of changes, and changes are very vital. We changed the bank from a hierarchical structure into a very lean, agile, and blockchain organization. And also from 8 years ago, very messy and routine-based thinking to the one we created our own thinking algorithm through the master frame field methodology and decoding methodology. And we also increased the transparency and democracy and autonomy among our sales force, where each of the people, either they are professional or head of microservice or head of block or head of division, have the autonomy to make decisions and be part of the blockchain. And we also revise our product to be simple, linear, and better with fastest turnaround time. And we also changed the bank from quiet and unknown and small bank to the leading in terms of leading into the retail lending, leading in auto loan, leading in the credit card technology, leading in bancassurance and other part. And we also have the 360-degree marketing for our own key product, as you could see, for the apartment or the townhouse or credit card or other product. And we also maintain what I mentioned earlier on the app factory and this world-class system that be enabler for our growth. So that in the 8 years, the bank lending book grow from 67 trillion to more than 320 trillion today, which is a 500% growth. The customer base grow 11 times. Credit card grow 13 times, from 7,000 card to today almost 1 million card. 1 million card with the spending per card is the top 2 in the country. And digital transaction grow more than 100 times in 8 years. Today we have a 500 million transactions per year, and we would reach 1 billion transactions per year very shortly, equivalent to more than 96% of the transactions today are gone through the digital channel. And we bring the profit before tax more than 9 trillion. And this is very like a true and transparent profit. And this excludes other factor I mentioned earlier, the 10 trillion written off loans, including mortgage, available to be collected, and also very prudent in other revenue recognition, like several trillion of the bancassurance upfront fee, we still not recorded as income yet. So this is very consistent in the last 4 years. VAB is the most retail-oriented bank in the country, with 80 to 85% of the retail book in the total lending, and retail annual growth rate about 30%. And this is the summary of 8 years of VAB versus banking sector. In terms of growth, we grow around 22% compared to banking sector, about 14%. Lending for retail grow about 30% a year, and deposit 21%, revenue grow 25%, profit grow 37%, and the average return on equity for the 8 year period 25% compared to the national average of 18%. So that is summary of 10-year transformation journey. Now I jump into the divisional strategy, starting with retail banking. So this is not new. The main thing is that we target the customer segment from middle income, affluent, and high net worth. As Mr. Chung mentioned earlier, the increasing middle class have given us the greater opportunity to serve in the mortgage or business loan or auto loan, personal loan, credit card, deposit, bancassurance, digital banking, and transactional banking. And for that, we continue with the target 20 to 30% growth of the key metric in each year in the 10 years period. Jump into the retail lending. So you see in the last 5 years, VIB retail lending accounted for around 80 to 85% of the retail of the VIB lending book, and that remained unchanged. And in the retail, half of that is the mortgage, and the remaining are business loan, auto loan, credit card, and other loan. And more than 90% of retail book are fully secure. And in the retail lending, the mortgage is the most important one, and we don't target the very big ticket of the very fancy project. It's a very basic need of our product like a townhouse or apartment or residential home loan, home equity, home renovation, and refinancing, with the ticket size ranging around $100,000 to $200,000 and the LTV around 50 to 70%. And almost 100% of the mortgage that we given have a collateral fully secure with the red book and pink book. Last quarter, we came back to be #1 in the auto loan market share, with our market share in the biggest national manufacturer, auto manufacturer, and distributor became to 20 to 40% in each partner. And also we invested in growing the business loan, as you could see in the chart, very dynamic in the last 5 years. And it also be an important part for the bank to diversify the cash management and CASA solution. Credit cards, so if you could observe in the last 6 years, the time that when we started with the credit card transformation, it grew very steep, with the curve very steep upward. And we target to finish the transformation with almost 1.6 million cards. And this year, we already achieved $5 billion in the card spending, and we target $8 billion in 2 years' time. And we have been received the award from MasterCard, Visa Card, Amex Card, and also Vietnam Record Association. Last year, only VIB received 8 awards by MasterCard Vietnam on leading in terms of the innovation and scale and also the quality. So that is summary of the retail banking strategy. Now about corporate banking. This, because in the last few years, we have reserved all the lending room for retail banking. So corporate, when retail banking after COVID have a certain difficulty, we have given some room for growing in the corporate. So you see the trend in the 3 years grow very dynamically, but the NPL dropped very significantly. That's because we focus on the leading segment in the leading corporate in leading segment of both private sector, FDI sector, and SOE sector. And the key industry we mentioned over there, material construction, power, oil and gas, industrial, and automobile. The final division is institutional banking or treasury, where we are the market maker and market leader in especially the government bond and FX. Treasury have traditionally have about almost $2 billion in the offshore funds, but because of the offshore fund rate come up, so recently we maintain around $1 billion. But when the rate go down, this is another source for us to diversify our funding. And Treasury, VIB has ranked #2 in the FX swap volume, #1 in government bond trading volume in HNX, and also #1 in the VBMA repo transaction market, with the volume total about $40 billion in the government bond trading. So that is summary of the key business strategy of the key division. Now I come to the financial performance. The balance sheet of the bank, you could see the trend in the first 2 quarters is flat growth. Customer lending almost no growth in the first quarter, minor growth in the second quarter, and start growing dynamically from the third quarter. The quarter 4 only, VIB customer lending growth 10%. So that means our capability to grow lending about 10% per quarter is there. It's quite obvious. And because of the growth in the lending, it helped to grow in the deposit, and also the credit card and bancassurance, a very strong quarter in Q4. And that made up our total asset, 463 trillion, 20% growth last year. And we have maintained strong and optimal liquidity ratio in the LDR, in the short-term funding for medium long-term loan, in the CAR for Basel II, and in the net stable funding ratio for Basel III. For the profit and loss, I mentioned earlier that we have observed the reduce in profit year on year, 16%, when we reduce the lending rate significantly to share with the economy and also to retarget the better customer base. We also make the aggressive provision. However, you see the provision trend have reduced. And the quarter 4 recorded profit 2.4 trillion, 20% increase compared to the previous quarter. So that trend, I think, would help to be able to achieve good profit, 20 to 30% growth in profit in this year. I mentioned earlier that because of the majority of VIB book are the secure asset, so we have a make full provision and written off a lot of mortgage. Why? The value is still there. That's why we start accelerating the write-off recovery. Whatever we collect, it becomes the income of the bank. So last year, we recorded about 1.3 trillion income from write-off recovery. We target this year to be 1.6 trillion income from this source. For the ratio of NPL, because of the reduction in the LIA, it made the ratio of profitability reduce slightly last year in terms of NIM, in terms of the cost to income. And we expect this to be recovered again this year. So the final slide of my presentation is outlook for the next 2 years. For growth, last year we grew lending 22%. 5 years ago, when we are the first Basel II bank, we received the quota to grow 33%. So 20 to 30% growth in lending and deposit in the next 2 years is the target of the bank, that we could achieve it with our internal capability, and we expect the SBV would approve for us to grow at this level. Credit card, we expect to grow 30 to 40% in terms of both digital and physical channel, and in terms of both card acquisition and card spending. And we expect the customer base to reach 7.5 million customers by 2026. Productivity, we expect it to range around 30 to 33%. Why? We continue investing in technology, in marketing campaign, in talent, and we continue opening 10 to 15 new branches per year in the next 3 years. And we continue to make operating model leaner and faster and have a more productivity gain everywhere. For the risk, we expect NPL to be around 2%, the CAR Basel II around 11 to 13%, and we are piloting the Basel III, both the SA, AIRB, and FIRB. And we expect to recover 5 trillion in the written off loan in the upcoming years. And we expect the profit to come back to strong growth, 22% to 30% a year, and ROE from 20 to 25%. So that's summary of the bank strategy and financial performance, and I look forward to sharing more further with you in the Q&A session. Thank you.
Thank you, Mr. Long, for your presentation. And the final part of our presentation, risk management, will be covered by Ms. V.
Afternoon, everyone. So it's great to see you again to my presentation on risk management. So today, my honor to give you through 4 parts of risk. First one is the risk management framework, Basel roadmap, capital asset quality, lastly, market and liquidity risk. So this slide is for those who are first time to our presentation. So this is the risk management framework that we are operating for over 7 years. So for the risk management, we divide in 3 stages. So you can see that the board of the bank have very clear vision and value, so that we set up very strategic plan and risk appetite for our daily business activity. And then we cascade to our division. And then we also have the portfolio monitoring, performance management to review and monitoring what's our daily activity, so that we can identify the early risk and take the early action to recovery bad debt for the bank. Lastly, we also use advanced tool and data analytics, so that we can perform stress testing, especially for 2023 to now. The economic head up and down, so that we have make the bank that perform profitable by we timely change the risk appetite, so that we can minimize the loss. So this is very interesting topic. I want to share with you more detail in my presentation. This is the 15 years Basel in Vietnam. So there are 2 phases starting from 2015. But if for VIB, we are market leading that we complete the Basel II by end of 2019, which 4 years earlier than the plan. To well prepare for Basel III. So by 2020, we already build a data engine for and credit modeling, so that we can apply earlier the Basel III to life. By 2022, we also apply Basel III standard for liquidity and net stable funding ratio for internal liquidity limit management. So in phase 2, we start from 2024 that VIB is also appoint a steering committee appointed by SBV, so that we are top 10 bank can pilot the Basel III. So by this year, 2025, we target to pilot Basel III for advanced internal rating base. And in the meanwhile, we also operating our internal policy, so that we can adapt Basel III earlier. So for next year, 2026, we also, when we complete the piloting, we also engage vendor for IIRB validation, and later on, from 2027 to 28, we can get SBV approval for fully comply Basel III. So we have the bank that increase our risk management capacity. So for the next slide, I want to give you through more illustration of Basel III in our credit risk management. So for customer journey in VIB, we define to 2 stages. The first one is customer acquisition. When new customer, new credit application, they come to the bank, and we can use the application scorecard, so that we can, with the advance of data analytics and predictive of bad debt in the future, we can classify customer from low risk to high risk, so that we can fasten customer decision making based on customer credit wellness. And then for that, we can have customer that smart limits assignment, optimize risk-based pricing, and advanced portfolio management. And then when customer being a VIB customer, we can use the behavior scorecard so we can accurate customer segmentation. Then we'll have the bank that have better customer service and smart credit adjustment, because most of our customer is medium to long term customer, so that we need to frequent review customer, and then we can reduce or increase to maximize our profit and minimize loss. And then for high risk customer, we can have early debt collection strategy. Lastly, for the overdue portfolio, so we can apply the collection scorecard again, so that the scorecard will have the bank ranking customer that easy to collect and hard to collect, so that we can build the effective customer strategy development, optimize customer repayment amount, and smart headcount allocation, so that we can optimize our cost for collections. In terms of our capital, VIB capital is very well capitalized with a strong base that we optimize level. And you can see that our equity that increased 10% over the years, and our CAR ratio is above SBV requirement. That's nearly 12%. And we also leading the bank that we have high intensity of cash dividend payment for the investor. Next, I would like to walk you through our asset quality. So first, to recap to you again on the slide that we have presented before, that a high risk loan. So you can see that even our loan exposure is increased, top in the market 22%, but the high risk exposure is reduced. So the property trading that reduce, and investment on corporate bond for manufacturing and servicing also reduce. And this high risk, for we don't have any exposure of BOT lending, corporate bond guarantee, or investment on corporate bond for property trading, though a zero balance, and also we observe that zero NPL for this segment. So this is interesting slides, and I would take this change to thank to our collection team, that you can see in the trend, and you can see that our overdue book like Cat 2 and Cat 3 that under control, especially in Cat 2, you can see that we have dropped significantly, that the team that collect more than 5 trillion Vietnam dong of Cat 2 that we reduce significantly. And in Cat 3, another side, even we try to control the NPL at flat, but also you can see the absolute number that we reduce net NPL balance, that 100 billion. So hopefully the amount can be maximized in 2025 with a lot of effective collection strategy that we explain to you later. In terms of restructure book, so thanks to the SBV guidance, we had two policy that to support customer. The first one is COVID restructure. Second is circular 02. So for COVID, you see we end up the balance COVID for this year. So now we got only have few amount that less than 0.1% of loan balance of circular 02, and most of customer that pay off the loan. So now we hopefully for 2025 or next 6 months, we can recover the restructure. Another side that Mr. Long has shared with you before, our recovery income at peak significantly, especially for Q4 2024, that we believe that there's a recovery of economic or real estate market, and customer, our collateral is good enough so that we can even recovery from the bad debt or off balance sheet. So last is slide of market risk and liquidity. So you can see that most of liquidity risk cater that we comply with SBV and also far away with their requirement. Net stable funding ratio that we already apply Basel III standard, that we also comply and much higher than more than 116%. So that's make you very good picture for VIB, especially in risk management, that on the ratio we in well control, and we always maintain the liquidity started out of the bank at optimal level. So in summary of my presentation, so you know that the VIB, we diversify in retail banking. We don't have any high risk loan. And so for 2025, we focus to revamp. Mainly we acquire good quality customer, good collateral in urban area, and also we optimize our collection operating model so that we can recover bad debt better than for this year. So this is the end of my presentation. So thanks for your listening. So I will see you in Q&A part.
Thank you, Smith Wee. So we conclude the first part of our webinar, and please take a 5-minute break and we will come back to the Q&A session. So if you have any question, please submit in the Q&A box or send email to ir@vib.com.vn. Thank you. Welcome back to the webinar. Let's start the Q&A session. Thank you very much for those questions that sent us in advance and during the webinar today. We have received around 55 questions from over 300 attendees today, in which from 21 global organizations and 34 domestic security and fund. So we classify into three groups: the macro and market outlook, business and financial performance, and risk management. The first group questions cover topics like lending growth, macro and market outlook, asset quality. The second group have a question about profit, OPEX, capital plan, and risk management. The third group, we have question topic about VIB underwriting policy, funding strategy, and industry environment. So that's a quick review to overall picture of question. So we have about 35 minutes for the Q&A session, and start with the present question first, and then we go through. We will begin with the question that sent us during the webinar. So let's start with the first question. So what is the credit growth rate for VIB in 2025? And what are your lending growth driver in the last year, and any change expected in this year? For this question is asked by Vietcombank Fund, SSI, SSC, and DCC. So this question I would like to invite Mr. Long to answer.
So thank you for the question. We appreciated the way that SBV announced the credit room recently. Last year, on the very beginning of the year, they announced that the industry lending growth target is 15%, and they allocate the lending room at the very beginning of the year. So similarly for this year, so from beginning of the year, the SBV announced that the plan is to grow 60% for the whole banking sector, and for VIB and other already received a allocation. VIB around, for the first cut, around 16%, similar to last year. However, we normally grow at 150% of the national average. So that's why, as I mentioned earlier in the outlook, we expect this year to grow 25 to 30% for 2025. And the key growth would obviously come from retail banking. But beside that, we have the SME banking, corporate banking, and institutional banking. Whatever room available, we would allocate to those that bring the highest efficiency, lowest and manageable risk, and also the productivity of the sales force. In retail banking, as we have ranked the efficiency per product line, so the highest would be our mortgage book, auto book, and credit card book, and we will also have a business loan. So that is a summary for the lending room of VIB and plan to grow next year. Thank you.
And the next question is asked by ACBS, BSC, MBS, and Vietcombank Funds, also related to the lending. Please share your outlook about the cost of fund and NIM 2025. So I would like to invite Mr. Long again.
Yes, so the NIM of VIB in the last 4 years ranging around 4 to 4.5%. Last year is the lowest in the four years period. And I mentioned earlier that firstly, the retail banking strategy help us to have the better NIM if you could manage the operating model well. And secondly, the we have reduced the lending risk significantly for our retail and SME and customer and corporate customer last year. That's why we see a slight drop in our NIM. It now today is around 4%. So next year we expect to increase a little bit in the NIM, not very significant, but a little bit, because we continue the dynamic growth of 25% to 30%. And in parallel, we would target to reduce the cost of fund. So this would become a discipline at the bank through the customer solution and through the what we are in the planning phase to launch to the market, the new facility that would help the customer to have the highest rate at the most convenient and most safety. And that app would be available in the market in the maybe couple of weeks after TED. So we expect that to help us to reduce the cost of funds significantly. Together with that, we also focus on the product with the higher NIM and profit margin, as I mentioned earlier. So for that, we expect NIM to be improved in both retail banking, corporate banking, SME, and some in the FI sector. Thank you.
Our next question is about a macro outlook. So what are the opportunity and challenge the banking sector had to face in this year? I think that this question is for you, Mr. Chu.
Yeah, thank you for the question. I would say that, the outlook of 2025 is optimistic, basically, based on the four things, we see in 2025. The first thing is that we see that the strong reform in Vietnam. So that one is basically create a lean structure of the government. So that one is make the flow and procedure basically much better than before it. And the second one is in FDI. So Vietnam is still consistently to be attractiveness, all the big players from the global into Vietnam. So we see that the quality of FDI in Vietnam is increasing compared to the previous year. So you see that, as I mentioned before, we see all the big players in technology is already in Vietnam, like a Samsung, and we have recently we have an NVIDIA, and also we have a Qualcomm, Intel, and also ARM Core. So that one order, showing a presence in Vietnam. And also, the government also put a very aggressive growth target and increasing your public investment. So that one is create a good platform for Vietnam for faster growth in the next couple of years. And you see that, all the big projects, coming up, in Vietnam recently, like, railway from the north to the south, and the connection to the China railway, and also, new airport and new port, in Ho Chi Minh. So every day, we celebrate, all the highway, completion, all the highway things. So this one will create a lot of, job, and then also, an incentive, for the economic growth. And the last one is the basically export market, So in Vietnam, you see that, Vietnam is again a lot of market, global export market share, in global market, not only in US, we have a trade surplus with US is roughly around more than $100 billion, but you will see that, Vietnam also increasing, in all of the market, like a European, Korea and Japan, and also South Africa as well. So this one is basically put at, keep the Vietnam with a lower risk in the Trump 2.0. The next one is the Vietnam. The good thing is that they also increase the value of export commodity, so that help Vietnam to gain more value in export. And put all it together, those factors, I would say that, I'm very optimistic, about the outlook of Vietnam in 2025. And back to the banking business. So based on the strong macro indicator, and another factor that, have banking, this year, it's It's improving on the NIM, as I did mention before. The worst already behind of the banking industry now. You see that all the corporate bond and real estate market basically starting to recovery, and that one is will have most of the bank is basically to either recovery or either to rise a new loan access based on the better quality. So that one is also improving NIM in the banking industry. And recently, we have a 0.2 decision, but I would say that one is not really impact much, because of most of the bank already book provision on aggressive book their provision, so that one would not impact much for 2025. So I would say that the banking industry, the first thing they will get benefit on the higher credit target from the State Bank of Vietnam. So that one is one of the positive. And the second one is the strong economic growth that also create a opportunity for the banking industry, because the banking industry is one of the first segment that get the benefit when the economy go up. So I think that that one is create a good opportunity for bank. And the NIM improving, and the worst is already behind of the banking industry now. So in terms of the liquidity, I would say that in 2025 we still don't see any liquidity problem for the banking system. So in the short word, I would say that in the macro overall for 2025, Vietnam economy is going very well. And in the banking industry, it's very optimistic as well. Thank you.
Also, another question related to macro about the Trump administration. So, how it will economically impact, and will Fed change its monetary policy and make any impact to the industry? This question is asked by HSC, VND, and Kafi. I would like to invite Mr. Chum again to answer.
Yeah. So I think that in Trump 2 years old, so the most worry about, and like a top three name in the market, like China, Vietnam, and Mexico, that is the top three biggest country basically create the highest trade deficit, with the US. So that may impact, when the Trump administration, put the tax on those countries. So Vietnam basically will be impact on the decision. So as I mentioned previously, previous question as well, so Vietnam is basically, the first thing we gain market share for export, globally, not only in US. If the US basically they put the tax there, so we have a chance to go through other market as well. The second one is Vietnam is already increased the value of the item, in the export item. The third one is basically Vietnam have more than 50 free trade agreement with globally. So that one, have Vietnam basically to be the less impact compared to the rest of the market. And in terms of Fed, so the most thing is the people worry nowadays, that the Fed will reverse the monetary policy. That means that increase the interest rate. But I don't think that will happen. The people think that, okay, if Trump is basically put the tax on the import export tax, so that one will create the CBI of US increasing, and then Fed may increase the interest rate. I would say that that will not happen. The Fed still may cut 2 times in 2025, bring down the target rate to like a 3.75% for end of the year of 2025. So in conclusion, it basically if the question is that if Trump put the tax on the Vietnam, it will impact. I say yes, it will impact, but Vietnam have a way out of this one, instead of export to US, we can pick up the other similar market, to export to. And in the meantime, we also have a 50 free trade agreement, behind us. So that one is we have an impact, yes, but seriously impact, I don't think that will happen. And Fed, again, I don't think that Fed will increase tightening monetary policy again, because Trump is basically, it's very American first and focused on economic growth. So I would say that, the tightening monetary policy in US, it will not happen in 2025. But we would still see a chance of Fed to cut the interest rate 2 times by 50 basis points to like a 3.75. Thank you.
Thank you, Mr. Chung. So the next question is about, please share our outlook of NPL and asset quality of VIB and the market. This question is asked by VIS, Vietcombank Fund, and Phú Hưng Security. For this question, I would like to invite Ms. V.
Well, thanks for your question. So for the outlook NPL of the market at VIB, I would like to share that it's much better than 2024. So this can be achieved because there are 2 key factors. First one is for external factor that you see that Mr. Chung had explained to you before, that there are positive picture of macroeconomic. So the recovery of economic, lower interest rate, and we have a lot of supportive policy to propose Vietnam economic, also the push up the GDP role compared to other markets, so that NPL in the market will reduce. Normally, the industry ratio is above 4%, but we hope it will bring down below 3.5 or 3%. In case of VIB, so we have the target, and we hope we can achieve that will be below 2.2% for this year, 2025. That's because our internal factor that you see in my presentation, we have very well managed of Cat 2 that reduce sharply, and Cat 3 also unstable. And this is very less function to get new NPL in the book. And by the way, another side that we also have a lot of collateral sale and litigation process, proactive debt collection activity, so that we can control our overdue bad book from this year. And again, as I mentioned in my risk management framework, that the asset quality, the preventing activity is very important. So with apply a lot of advanced risk scorecards, we can acquire very good customer in our base, so that the probability of default will very minimal for us for this year. And also we get very high liquid collateral, mean asset, the real estate in urban area. For example, that from this year we launched the apartment product, so that we with our portfolio management, we see that the recovery bad debt of apartment is really high, it's nearly 100% when customer even hit bad debt. So that we believe that our asset quality from this year will be better than previous one. So this is my outlook for NPL for VIB and market. Thank you.
Thank you, Ms. V. So the next question is asked by Mass Investor. So how VIB can achieve 11 to 12,000 billion profit before tax in 2025? What are key drivers that have VIB can achieve that profit level? So this question I would like to invite Mr. Long.
Yeah, so I mentioned earlier that we have a floor target of 11 trillion profit, which is 22% increase year on year, and we internally target about 12 trillion, increase 33%. So there are 3-4 factors that would impact to this increase. Firstly, in the volume growth, last year we saw the balance sheet grow 22% in the lending, and that would be translated into this year growth in the TOI. And this year again we target another 25% increase. So that is volume. Second is on the margin. We expect the margin or the NIM would be improved. First is to initiative to reduce cost of fund would be effective. And secondly, for those that the loan that we written recently, it would be gone through the honeymoon period with the general provisioning immediately when it is recorded as a loan. But gradually it will become after honeymoon and no more provision, and that would give a very strong profit growth for those lending. So that is the second. The third is that we have aggressively made the provision in the last 2 years, and with the trend of the Cat2 reduced more than almost 30% last year, and the book it become healthier, we expect the provisioning to be reduced. Number 4, the driver is that we expect the fee-based business to increase. So I mentioned that we this year target the credit card to grow 30 to 40%. Last year in December, we observed the fastest ever growth in card acquisition, more than 50,000 cards acquired per month. So that would be translated into NII and NFI for card. So besides credit card, we would grow in the corporate banking and the SME business, which also bring more fee-based business to us. And finally, we expect that we would recover more in the write-off so that it would contribute another source of revenue. So altogether, we expect the profit next year to be from 11 to 12 trillion. Thank you.
Thank you, Mr. Long. So the next question is asked by Shinhan Security, Blue Fund, Vina Capital, and DBS. Please kindly share the upcoming divestment plan of CBA. So for the question, I would like to invite Mr. Chu.
Yeah, thank you for the question. As you know that, CBA already divest 15%, it stayed, in VIB in 2024, and that it bring down to the investment is less than 5% of CBA. It become a minor shareholder. So this one is basically due to the change of the CBA strategy. They have to repatriate all the overseas investment, not only from Vietnam, but they also show the business in Indonesia, China, and Vietnam. So that is to meet the capital requirement, of RBA in Australia. So as become a minor shareholder, so CBA they have a discretion, to decide it whenever they can divest from the its share, the remaining share in VIB. So I would say that we don't have any schedule from the CBA, but the CBA basically have its plan to divest. So they have its right discretion, to divest at any time. Thank you.
Next question is also about the capital plan asked by mass investor. So has VIB looking for a new strategic shareholder? And please describe the new strategic shareholder of VIB and share more about the capital plan in this year. Again, I would like to invite Mr. Chu.
Yeah. Thank you for the question again. At VIB, we are opening for opportunity to select the strategic partner to go long term with VIB. And you see that throughout today the meeting, we see a lot of opportunity in the market. In terms of Vietnam grow at 8% this year, and then the next couple of years double digit. And also the government, put seriously on in public investment, all a very large project and very attractiveness, in the global FDI. So this one is a great huge opportunity for Vietnam and for Vietnam overall and for the banking industry. And we also talking about their middle class income and retail business opportunity, very low penetration from their household debt and also the credit card business as well. So VIB, we are open for the high quality partner to go along with us to deploy all opportunity. And we are open, all the quality, all the bank is to have a same mission and vision. It's like a VIB to go the long term to deploy the market opportunity to build up the retail market, in Vietnam. So thank you.
Thank you, Mr. Chu. The next question is about risk management. How VIB control the special mention loan and what is the target of the Cat2 loan in this year? Asked by KBB, Mira Asset, BSC, and Siam Commercial Bank. So I would like to invite Ms. B.
Thanks for your question again. So for this question, asks how we can manage Cat 2 special mention loan. So beside collection activity as traditional way, so in VIB, with the advent of credit scorecard, so we also invest more customer awareness on their to protect their history payment. So you can see that if customer have very good payment history, they can have a lot of opportunity to get the credit loan from the bank, and with lower interest rate in the market. Like for last 10 years, I haven't seen the lending rate as low as in this year. So we raise customer awareness that customer must pay on time for the bank so that they can keep the good credit bureau record, so that they have a lot of opportunity to get bad debt. To get the good debt, and also like for customer in our book as well, through 6-month review. So any customer have like a signal of default on overdue, so we will increase the interest rate. So we give a customer very full picture that they need to keep their credit bureau good, so that we can maintain and prevent new Cat 2 for the bank. And like again for debt collection activity, we separate the customer from low risk to high risk customer. And for low risk, we just make a call, email to customer. But for high risk, we start harsh collections, like we call or make field visits, so that we can keep control very good Cat 2 for this year. So that's all for my answer. Thank you.
Thank you, Ms. V. The next question is asked by mass investor. Why CIR increase, and what the key reason and target CIR for 2025? For this question, I would like to invite Mr. Long.
Yes, so our cost to income traditionally kept at around 30 to 33% in the last few years. Last year, it jumped a little bit to 35%. So the main reason I mentioned earlier is the reduction in the NIM, as we significantly reduce the interest rate for our customers. And also because we increased lending significantly recently, and most of the retail lending are in the honeymoon stage, meaning when you buy like a 6-month or 12-month or 24-month fixed rate, the honeymoon rate is normally lower, and you have to record on the origination cost immediately. So the initial phase of growth, you have to observe the low NIM and higher cost. So that's why last year the cost to income jumped a bit. Our philosophy in the cost management is to spend more so that you could earn more. That's why for the upcoming years, we keep smart spending in technology, or in the people, or in the 360-degree marketing for our key product, and also for the building the operating model. So why we keep investing, and also on the new branches, about 15 new branches per year. So why we keep investing, we continue with the leaning operating model. We would reduce the inefficient sales force and head office, headquarter people. And we also apply digitalization, so that the workforce will be reduced through the operation. And that for that, we expect the cost to income to bring back by like 34 to 33% this year. Thank you.
Thank you, Mr. Long. So the next question is about the offshore funding. So offshore loan is decreasing because higher cost of fund. So in what market context will VIB raise the offshore fund again? So the question is asked by Kafi, Dragon Capital, and PTF. So for this question, I would like to invite Mr. Chum.
Yeah, thank you very much for the question. So as a diversify of the funding strategy of VIB, it's a continue unchanged. So we are targeting like a 10 to 15% of our funding is basically to the offshore. Instead of put 100% in the onshore market, we are targeting for like a 10 to 15%. It depends on the cost, If last few years, basically, Fed keep the rate in very high, plus the swap cost, that it make it very expensive to raise offshore funding. So that's why, we slow down a little bit, but it doesn't mean that we stop all the offshore funding, but we are slow down and we are reduce the funding from the offshore. And I think that recently, last year, the Fed already cut like 1%, so it make US dollar cost offshore and onshore now is most of the like a balance. So in this year, we will come back, to the offshore funding. So the first phase, what we are doing is that we focus more on the like a syndication and bilateral loan agreement on the funding from the offshore. And in the phase two, when Vietnam rating, like a triple B, investment grade. So that one is the VIB will issue the international bond to raise the medium-term and funding, medium-term and long-term funding, from the offshore. So I think that strategy is basically still unchanged. So we are still focused and diversified, 10 to 15% of our funding to the offshore. Thank you.
Thank you, Mr. Chum. Next, about the underwriting policy of VIB. Please share in the context of the low credit demand but high credit growth pressure. But the question is asked by mass investor, and I would like to invite Ms. B to answer.
Thanks for your questions. So for VIB, the underwriting policy is not changed for low demand or high demand or credit growth pressure. For VIB, underwriting policy will be driven for the sustainable growth and high credit quality book. So that reason change in our underwriting process policy, which means in 4 key drivers. The first one, we design our product very clean and simple, so that will be less adjustment from the approval or appraisal. That also we attack the customer have stable income with the product like apartment or townhouse we launched in last year, and we offer very interesting interest rate so that we can attract high quality customer. In terms of customer, we also enhance the income source from independent or multiple source like social insurance, tax, or even we acquire customer from medium to high score, like I presented before. Third one on collateral. Like VIB, we have very consistent risk appetite on collateral. We only receive collateral that fully get legal document like pink book or red book. We don't accept under construction, so that we get more chain when to sell the collateral when customer get default. And lastly, for the sales force, we focus on training and coaching our salesmen or also approval so that they can raise high risk awareness. And we also reduce exceptional credit approval authority and centralized credit approval activity for the central approval, so that we can improve our TAT and also improve our credit quality as well. Yeah, that's all for my answer. Thank you.
Okay, thank you, Ms. B. So due to limited of time, so we will start with the final question. For the remaining question, we will follow up with you after the event. So the final question today is, will VIB pay the cash dividend or retain to strengthen the CAR ratio, asked by Mirae Asset and Maybank. So this question, I would like to invite Mr. Long.
Yes, so VIB have a tradition to pay attractive dividends to the shareholder, as I mentioned earlier, 30% a year in terms of both cash and share dividend. And this year profit reduced a bit, but if we could pay, we could pay around 20%. However, it depends, because this year we target grow in the balance sheet and the risk-weighted asset 20 to 25%. So we need capital for that. And in the meantime, we are also thinking of the capital injection from the new shareholder, and the board would send a proposal to the shareholder maybe next month, balancing this factor, the capital for growth, the cash dividend for the shareholder, and the potential of the new capital injection. So we will be able to give you an answer maybe next month. Thank you.
Thank you, Mr. Long. And so this question marked the end of our webinar 2024. So thank you for joining with us today, and happy Tet holiday. Thank you.
Thank you.
Thank
Happy
you.
Tet. Happy Tet.